Have you ever looked at a company's financial report and just felt like you weren't getting the whole picture? Yeah, those big headline numbers can be super deceiving. So today, we're going to pull back the curtain, we're going to reorganize those numbers, and we're going to find out what's really going on inside a business.
So think about it. When you hear a company is profitable, what does that actually mean? For most of us, our minds jump right to net income, right? That bottom line number. But what if I told you that number is often a mix of apples and oranges, and it's actually a pretty terrible indicator of a company's real performance?
And look, that's not just me saying it, it's right there in the source material. The standard income statement, the balance sheet, they just aren't designed to show you how well the core business is doing. They mush everything together, the actual business and how that business is funded.
So let's think about this like we're detectives, okay? On the surface, you've got the reported story, the official version of events. But we're not interested in that. We're looking for the real story, the one that tells us about the true health and the efficiency of the company's core business. Now, to crack this whole case, you only need to understand one single core principle: separating a company's day-to-day business from how it pays for that business. It's this classic, crucial division between operations and financing. You know, it's actually super simple when you think about it. Imagine you're running a bake sale. The money you make selling those amazing cookies, that's your operating profit. That $20 your parents loaned you to buy flour and sugar, that's financing. You would never mix those two things up to figure out if you're any good at selling cookies, right? Of course not. All right, so let's get our terms straight. Operating activities. This is the heart and soul of the company. It's making stuff, providing a service, selling coffee, whatever the business actually does day in and day out to bring in money. Financing activities, on the other hand, are all about how the company gets the cash to run its operations in the first place. This is stuff like taking out a bank loan or selling shares to investors. Now, these are absolutely critical decisions, but they are totally separate from the operations themselves. Now, I know this looks a little complicated, but the idea here is incredibly simple. On the left, you've got that classic equation, assets equals liabilities plus equity. But look at the right. All we've done is rearrange it a bit. By pulling the operating stuff away from the financing stuff, we get this powerful new number all on its own, invested capital. And that is the key. It's the total cash investors have put into the core business, completely separate from anything else. So our first mission, our first major clue, is to find that invested capital. It tells us exactly how much money is truly at work inside the company's core operations. And this is what a standard balance sheet looks like. It's kind of a jumbled mess, right? You can see operating items and financing items are all mixed in together, and it just makes it so hard to see what's actually going on. But watch what happens when we reorganize it. Bam, we've separated the core business assets, the engine, over on the left. And on the right, we've isolated the invested capital. That's the fuel for the engine. Now we can see clear as day the exact amount of capital from investors that is directly funding the company's actual operations. Okay, so that's clue number one. We found the true amount of capital that's been invested in the business. Now, for clue number two, we need to find the true profit that capital is generating. And for that, we've got to turn to the income statement. The metric we're hunting for is called NOPAT. It stands for Net Operating Profit After Taxes. The easiest way to think about it is this. It's the after-tax profit the company would make if it had zero debt. It's just a pure, clean measure of how well the business is running, completely stripped of any financing choices. So here's a standard income statement. You see revenue up at the top. But then, as you go down, they subtract interest expense. But wait a second, that's a financing cost, not an operating cost. That one little line item totally contaminates the final net income number because it's mixing in financing decisions. But when we reorganize to find NOPT, we calculate the profit before any of that interest expense is taken out, and then we figure out the taxes. The result? A perfectly clean number that shows us the pure after-tax profit being generated by the core business and the core business alone. All right, this is where it all comes together. We have our two main clues, the true invested capital and the true operating profit, NOPAT. Now we can finally put them together to solve the case and see how well this company is really performing. And here it is, the big reveal, return on invested capital, or ROIC. This, my friends, is the ultimate performance metric. It directly answers the most important question there is. For every single dollar that investors have put into the core business, how many cents of profit is that business spitting out each year? And the formula? It could not be simpler. It's just our NOPAT, our true operating profit, divided by our invested capital, the actual money funding those operations. It just so elegantly connects our reorganized income statement with our reorganized balance sheet. See, the power of this one number is its purity. Because it isn't twisted or distorted by weird financing or tax strategies, it just reveals the raw, honest-to-goodness efficiency of the business. It's really the only way you can get a true apples-to-apples comparison between different companies. So now you have the tool. The next time you see a big headline about a company's record profits, you can look right past those reported numbers and ask the real question. That's great, but what's their return on invested capital? Now that's the real story.